Hello everyone, welcome to Manasvi channel, and today's topic is Introduction to Financial Accounting. Before going to this subject, first we will know about what is the meaning of business, where we use these accounting words in the business. Okay, first I will teach about this business. What is the meaning of business is a continuous activity of production and or purchase and sale of goods or rendering services with the intention of making profit. Now see here, business, whether it is a small business or large business, is the continuous activity of production. Means what? Anywhere they will purchase some goods or they will sell some goods. Okay, that is a continuous activity of production, purchase and sale of goods or rendering services. These purchase and sale of goods or rendering services, we use this type of an activity is called as a transaction. Anytime we will not write to purchase and sale of goods. Okay, all this. Instead of these, just we use the word transaction. Transaction means what? An activity of the business is called transaction. For what purpose we are doing business? With the intention of making profit. Okay, in these so many days we can't remember all those transactions at a time. So what we do is all transactions we have to record it in the books of accounts. Books of accounts. Okay, it is impossible to remember for a normal human brain to all these transactions at a time. Suppose we at the time of preparing final accounts, it is not getting correct answer. Okay, so for that purpose we have to use these transactions is recorded in the books of accounts. So transactions is to know about the financial position of the business. Financial position of the business. Suppose we forgot some transactions, okay, we did not maintain these books of accounts at a time of preparing final accounts. I forgot some transaction in the balance sheet is getting equally, no, sometimes it will be mistake. So that's why we have to use these transactions in the books of accounts. Where will we prepare these books of accounts is in the financial accounting. Okay, now next is there are several reasons are there we have to record it in the books of accounts. Now first reason is this is only means what, for every person we can't remember all the transactions. So that's why first reason is what is to record it in the books of accounts. This will want to change the financial position of the business. The next reason is any businessman has to show interest about the knowing the results of the business. Means what? Whether it is a profit is earned in the business or loss is incurred in the business. Every person want to know about the results of the business. That's also we have to record the transactions in the books of accounts. And next is based on the books of accounts, the businessman has to think whether it is business is continued for a longer period or some persons have to close this year also. Okay, in this case we have to use these books of accounts where in the financial accounting. Now see the financial accounting definition. We follow the financial accounting definition is given by the AICPA. What is the full form of this AICPA is very important, and remember this: American Institute of Certified Public Accounts. In financial accounting, we will follow the definition given by the American Institute of Certified Public Accounts. Now, see the definition of accounting is accounting is an art of recording, classifying, summarizing, analyzing in terms of money in a significant manner, and transactions and events which are in part interpreting results thereof. Interpreting results thereof. Okay, this is the meaning of accounting according to the American Institute of Certified Public Accounts. Now see here, accounting is an art of recording. Recording means what? Transactions are recorded in the books of accounts. That book is called as a journal. Okay, that journal are relating to the recorded. After writing all transactions in the journal, the next step is posting into the accounts. That is, that accounts are, we have to prepare in the ledger. Okay, this recording is journal. After whatever transactions are recorded in the journal, that all transactions are posted into the individual ledger accounts, that is classifying. After preparing the ledger, the next step is summarizing, is what? Trial balance. Okay, here in ledger accounts we want to know about the what is the closing balances of the accounts. Based on these closing balances of accounts, we will prepare the trial balance. In this trial balance, debit must be equal to the credit. So it is a summarizing. Analyzing means what? Final accounts. In final accounts, we prepare trading account, profit and loss account, and balance sheet. In trading account, we know gross profit. Okay, this gross profit is relating to the direct purchases or direct expenses and incomes. After knowing the gross profit, we deduct all the indirect expenses, losses, added indirect incomes and gains. After that, deducting these indirect expenses, we know net profit. This net profit will be added to the capital in the balance sheet. So analyzing in terms of money only. All the accounting process is done in the view of money only. Suppose in any transaction there is no money, so leave the transaction. That type of transactions we did not recorded in the books of accounts. So any transaction is there, definitely the transaction should be in terms of money in a significant manner. Significant manner means what? Chronological order. We have to maintain all these accounts in a significant manner and chronological order. And next is, first is the transactions are recorded in the journal, so we have to write the transactions in a date wise. Okay, then only it will be the helpful whenever we prepare the final accounts. Okay, that is a significant manner means chronological order, step by step. Suppose we want to write the transactions in journal, we have to write the date wise and transactions and events. We know transactions means what? Activity of the business, means what? Purchases, sales, like this. Events means what? End results of the business. Okay, after preparing these final accounts, we already know how much is the balance sheet amount. Based on the event means what? End results of the business, how much profit is getting, how much loss is getting. Okay, which are in part interpreting the results thereof. Interpreting means what? Explanation. For whom given explanation? Okay, any business or firms or companies, whatever it is, they appoint an accountant. Okay, now who is an accountant? Okay, who is an accountant? Accountant is a person, okay, that person pursuing a degree in relating to the accountancy subject. Okay, any businesses, firms, companies, public companies or private companies or any government related there. So anybody, they appoint an accountant. For what purpose? They want to know the financial position of the business. Okay, accountant give interpreting now. So that is an explanation. What about results thereof? Thereof is business. How much is the profit is earned in the business year? That is what a financial year. So in financial year there are two types are there. One is calendar year or a financial year. Calendar year means what? 1st January to 31st December. It is a calendar year. Financial year means what? 1st April to 31st March. So this is a financial year. Okay, based upon this year, in which year they want to follow, based upon that, at the end of the year, accountant prepare these financial position, give explanation to the businessman. After appointing the accountant, what are the responsibilities of account? Okay, now the responsibilities of accountant is, first, accountant has to identify the transaction. Means what? Identify the transaction is like the transaction is related to which account, whether it is a real account or a personal account or a nominal account. After identifying the transaction, next step is preparing books of accounts. That is what a journal. After preparing the books of accounts, posting into the ledger accounts. Then next is preparing trial balance. Then next is preparing trading and profit and loss account. Then next is preparing balance sheet. After all this completed, giving report to the businessman. Okay, these are the responsibilities of an accountant. Now see accounting cycle. Accounting cycle. First is identify business transaction. Next is journalizing. Next is ledger. Next is trial balance. Next is manufacturing trading and profit and loss account. The next is balance sheet. Okay, so this is an accounting cycle. Easy to remember. I will draw the circle. Okay, before going to this accounting cycle, the nature of accounting is like this only. First nature of accounting is identify the business transaction. Okay, after identifying the business transaction, that all transactions are recording into the journalizing. Okay, that is a journal. So this is the pro forma of journal. Date, particulars, LF, debit amount, credit amount. Okay, first identify the transactions. It is very easy. I will explain in later classes how to identify the transactions, how many types of accounts are there. Okay, based on the types of accounts, we will easily write the transactions into the journal. The next step is ledger. Okay, in this whatever the transactions are recorded in the journal, only that transactions are posted into the ledger account. Suppose one transaction is there, the transactions are not written in the journal, then I did not prepare any ledger account in this ledger. Okay, I won't prepare any account too. Whatever the transactions are recorded in the journal, then only you will post it into the individual accounts, that is in the ledger. After this, the next step is trial balance. Okay, in ledger, for what purpose we have to prepare this ledger is, we will know about the closing balances of the accounts. Okay, in journal, suppose one entry is there or one transaction is purchased machinery on some date, on next some date again I purchased machinery, on next some date again I purchased machinery. So three transactions are there. I won't prepare three accounts, okay, relating to the machinery. At a time, whatever the transactions are there relating to the machinery, that all there into the one account. Okay, so whatever the closing balances of the machinery account, that will be written in the trial balance. It is not an account, it is a statement. The next is, after this, the next is trading account, profit and loss account. Okay, in this trading account, we know the gross profit. In profit and loss account, we will know about the net profit. Okay, the next is, after knowing the net profit, next into the balance sheet, that is an liabilities, assets. After this will be equal, that is year is, that is a calendar year or financial year. At the end of the year, the balance sheet is prepared. Okay, after getting this tally, this year is completed now. Whatever the closing balances are there, then it will be automatically to the next year opening balances. First, writing these previous year balances is the opening balances. Opening balances. After writing the previous year balances is the this year opening balances. After writing these balances, the next is, again we identify the transaction, again writing in the journal entries in the books of journal, ledger, posting. Okay, so this is the accounting cycle. So these words are there now. What is the transaction, what is debit, what is credit, what is an account, okay, what are the assets, what are the liabilities, will be discussed in the next class. Thank you.